Good morning. This is Josh Hayes with Hedge Plus, and here is today's market monitor. Well, the corn market still has very little bullish news to trade off of. At least soybeans and wheat are not only building but maintaining some strength and have some supportive factors, especially wheat. Not only are we off to a very unusually slow start to winter wheat harvest, they continue to get pounded by severe weather with heavy rains, heavy winds, and potential flooding. So you've got that, and you've got what's going on in Iran and the threat to potential world supply movement. And especially if the U.S. gets involved in any way, there's definitely an escalation there that would cause disruption to the market. And then you've also got a second largest wheat growing region in Russia declaring a state of emergency due to drought with soybeans. You've got some strength being maintained ever since we've had the biodiesel mandates announced. And you're also starting to see some doubt about additional acres in late soybean planting in the areas that are behind places like Ohio, Michigan. The weather continues to bring forth lots of rain, and then you've also got areas where they typically be planting soybean acres by now, but are delayed due to the slow winter wheat harvest. So there's supportive factors for both of those that the corn market just doesn't have. Funds actually sold off another 20,000 contracts of corn yesterday and now have established their shortest position since last August. Thankfully, we're not at those prices that we saw last August, getting all the way down in the 360 range, but not very attractive prices nonetheless. And the thought behind all of this is that despite tight global supply and tight projected ending stocks, funds are really banking on a massive safrinha crop at this point in time. If that crop starts to get threatened during its harvest, you'll start to see some premium being added in. But overall, weather is not a concern here in the United States. Large majority of grain belts are expected to see healthy rainfall amounts from 1 to 2 inches over the next week, even as it starts to heat up. The heat is not an issue whatsoever right now, as long as the rain keeps coming, and it is currently forecast to. Taking a look at that weather, the severe storms are pounding the central plains, and it is expected to ease up over the next week or so. But right now, it's still causing, like I said, massive delays with winter wheat harvest, and it's also not allowing additional soybean acres to get in the ground. As mentioned, in Russia, state of emergency in their Krasnodar region. That is their second largest wheat growing region. Their number one largest wheat growing region has been in drought as well. Again, with Russia, on one day you're talking about extreme weather and poor conditions, and the next day you're talking about record yields. So balance that as you will. Most of that comes from the fact that they expanded their growing area in the past year. In Brazil, something to watch: the safrinha crop into the south is getting too wet, and that's causing wheat planting delays. But with as much as the funds are banking on a massive safrinha crop from Brazil, if they continue to have rain there and it starts to damage and delay safrinha harvest, that will become something that they would certainly take note of, and we'd start to see some weather premium built in from what's going on down there. And in China, rain is still falling. It is helping improve their crop condition there. No doubt they've already suffered some loss. That will be something it'll take some time to see the result of. It'll most assuredly increase the amount of imports China will need at some point, but we're still not seeing the final result of that just yet. Quick look at international prices. I want to bring this up because we've now come to basically the near almost the exact same price as what we're seeing with wheat coming out of Ukraine. So that's tightened up quite a bit, supportive for U.S. wheat. About $9, about 8.5 to $9 higher on corn than Argentina, and still a $20 gap between Argentina and soybeans and American soybeans, although that price in Argentina is on the rise. Our prices rose obviously on the strength of the mandates, and it's now leading Argentina's prices to rise as well. So a little bit of an improving picture there, but still quite a big gap with corn and beans compared to what's coming out of South America. Quick look at overnight prices, pretty flat. This is the day before a federal holiday. The markets will be closed tomorrow. Would not expect a whole lot of volatility today. These prices relative to this time yesterday have corn down about 3, beans up about 2, and wheat is up 11 cents in the last 24 hours. Quick note, Jason's livestock, his hog and cattle update will come out today, a couple days early. It normally comes out on Friday, but we are putting it out there today as we will be closed tomorrow. And then also, quick note that this is the last market monitor for the week with the closing tomorrow, and then I will not be in the office on Friday. So this will be the last market monitor for the week. We've got July contracts basically coming to an end. Next week we'll pick up with corn on the December contract will most likely be the most heavily traded, and soybeans will start to see a shift to November contract there, with wheat contract. The September contracts will likely be the most heavily traded. So a little bit of a transition, and we just got to hope that we don't just continue to slide with corn, but it's certainly possible if the weather keeps up. That'll be all for today. Talk to you all again next week. I hope you all have a great day and a great weekend to come.